The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. I had a peaceful weekend for a change. Hope you guys had a good one. What we're going to do first of all here is we're going to take a look at the S&Ps, and we kind of talked pretty religiously about this 2102, 2104 level, and we always talk about allowing the market to come to us. And one of the things that, the inflection point levels, if you will, that we've been talking about pretty religiously, again, is 2102, 2104, 2104 being this weekly unfair high. And we talked about a close above there would be relatively significant, and this is all again, relative to some of the breadth talks that we've been talking about within the scanner. And what I want to do here is just review a little bit here where we're at as far as TAS profile breadth. This has been a little bit of a guidance tool, to say the least, on what side of the market to hopefully be on. So what we're going to do is we're going to go into the S&Ps here really quick, just to kind of start off the show. And we're going to notice that long-term breadth is still negative. We were flirting around with some rollovers again this morning. We're going to have, the internals open, and some of these are going to flip-flop around. But I guess the basis of everything that I'm going to talk about is that we're pretty non-directional. We're not necessarily full bore short, but we're just relatively non-directional, and that means that you've got trading opportunities basically in ranges at the very least, and hopefully some inflection points to sell resistance. So there's that 2102, 2104, 2102 based around two other things. This POC on a very wide profile, and we just flirted with that. I know we got up to around 2109 last week, but again, we talked about letting the market come to you, pick the battle. If you get stopped out, you get stopped out, and then trying to, again, get your toe back in the water on the south side of that based on all these profiles not being relatively non-directional. Here's the 2102 area from a previous 240 that we were basing some of this on to try to get below that border. Now it seems to me, especially with some of the action this morning, and I'm going to point out to you that we're down, futures are down only about a point or two this morning, but considering everything we've just talked about, we may have some more trading opportunities getting south of 2094. What does that mean? That means that we could start exploring more of this fair auction down below the balanced area and start getting back into at least the 2085 and maybe even the 2060 area. Remember, you got to put stops above 2104 based on your appetite for risk. But what does that mean for trading stocks in general? That means that we're still not looking to load up on long opportunities and just take the hedges off and, go to the beach this coming weekend and not worry about being long everything in the world. This is, a stock picker's marketplace, at best. And then what we're doing is we're kind of shading this whole particular environment towards the short side. So that means we're looking for weak stocks still to short. And I know I've been sounding like a broken record, but that has been some really, really, fertile environments to trade upon in the last couple of months. And we found some really good opportunities based on looking at shorts. I'm going to cover a couple of usual suspects that I usually do before we get into those stocks, because, we want to kind of get the landscape of the trading environment here before we start looking at opportunities based on that short side. Again, here's the dollar. We talked about, this is obviously some volatile times on Friday, but remember, stepping back, we talked about the maximum support area being at around 91, 96.10, 96.11 on this. This is the daily fair auction or the balanced area that we've kind of been in here. And then this is our 97.09. This is our short-term support area. Short-term traders should have gotten stopped out of this trade. Intermediate traders should have been able to stay in this trade. And short-term traders also were able to get back in the water if you kind of followed what we were talking about above 97.09, again on the long side. So again, we've been a fan of trading the dollar from the long side only. And we talked about targets. I'll just mention them again. 98.31 up top, and even higher 99.51. So that's the story on the dollar. Let's take a look at the notes. This is the thing that the market is kind of in a tug of war with. Obviously, market likes lower rates, but notes and bonds are going up in the face of some predictions that I don't think are going to come true, that we're going to raise rates this year. My opinion is stock markets are going to fall apart again, and these notes and bonds are going to move forward. Now, we talked about a couple of weeks ago, 125 to the tick here, 125.13. That was some support areas. And we also talked about last week, ultimate targets up top on the long side, 127.19. Now, that's been hit as of Friday. We hit a high of 127.20, and we're just kind of rattling around up here. And we've had a profile up here in the last couple of days on the notes. This is the 10-year on a daily. So what do you do with this now? Again, my opinion is you're looking at targets and not looking at areas to sell on the 10-year. All right, this is pretty important here. We actually had a close above. This is our weekly 127.14. I wouldn't call that a real breakout close above, but 127.13, 127.11. That's going to be some resistance for this, because 127.11 weekly unfair lows, 127.13 daily unfair highs from a previous profile. Remember, these previous profiles take serious relevance. It's like an exponential moving average. The farther you go back in time, the little these inflection points mean. So the most recent box or the recent profile, these inflection points mean a lot. So weekly unfair lows, daily unfair highs from a previous profile around 127.11, 12, 13. That's your targets right now. And again, I'm not a big fan of shorting this. So this is kind of sit tight. Let's just wait and see what happens. And if we start getting some kind of consolidation around these levels, I'd love for it to stay above or around this DMZ that we just talked about for the next couple of days. Then I'm going to feel really good about going long again and putting stops below that 127.11, 127.13 on the 10-year. All right, so we're going to take a look at natural gas really quick, and I'm going to need the contract that somebody wants to look at here on natural gas. Which month? September. I'm just assuming September. September, is that? I'm just going to go with it if I don't hear anything. September it is. Excuse me. We're going to take a look at long-term time frames. I wanted to say so much. I'm starting to stutter here. 2.646. These are weekly unfair lows that held about a month and a half ago. And this is, even if you didn't have these profiles sitting here, it's nice to know that they're actually consistent with some of the unfair lows, or some of the recent lows that's happened in price action. That doesn't have to happen that way, but there's a pretty serious support level in the long term around 2.646. Now, what does all this mean? We've made lower lows on natural gas and made higher lows on Navigator. We're kind of seemingly edging up here on the other indicator that we look at pretty much. We've also got an intermediate level, 2.704, that's sitting down here that we kind of ricocheted off of, which is kind of cool that we just didn't really want to be there. if you see these prices go into these levels and just kind of sit around there, that's not very promising for the longs. Here's the 240s on this September contract, starting to show some green shoots again. So what would I look at to try to trade this right now? I know there's a lot of bearish news out about natural gas in general. On the long term, I really don't like how this thing is just kind of sitting down here and kind of making lower highs as we compress down here. You got to kind of step back. And natural gas on a long-term basis, especially a September contract, we started showing the breakdowns on the long-term levels around $4 or 4 points here. And as we've gone down on a long-term basis, we've only had a couple of disturbances of that kind of profile trend down. And I hate to say this for anybody who's long, we could have another flush on this before we turn around, and everything I've just said on a long-term basis may hold true. But as we go down into the shorter-term time frames, you do have some things to kind of bank off of in the short term or in the intermediate. 2.704 stops down below there, and obviously just complete uncle stops below 2.646. But the short-term traders, you've got 2.747 sitting here. Again, I think it's a little bit of a scary trade. I mean, that being said, a lot of good trades initially start out as riskier propositions. I'll say that. And a lot of times, when you're looking at these long-term levels, you want to try to, we talk about this all the time. You want to try to figure out, what's the long-term trend and try to trade on that side. So again, I know we're kind of basing down here, and it seems like we don't want to go lower, but to me, this action really might predicate some kind of flush to get everybody out and then reverse. Remember, that's kind of, the way trading goes. There's no free lunch, and these double bottoms, triple bottoms, all that kind of stuff. I'm not a huge believer that those are technical reversal patterns, if you will. So, in my opinion, watch out if you're trying to pick bottoms on natural gas right now. It would be kind of a short-lived trade until we start breaking stride here. I'm sorry, that's the weekly. This is the daily. Until we start breaking stride here and start showing some profiles that may want to kind of ratchet up and provide higher support on natural gas. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at the Shanghai really quick. Again, same premise, not exactly the same premise as natural gas, but you want to see things get away from these areas. And we talked about on the Shanghai, we talked about 3554. I don't know if I can make the analogy of natural gas to Shanghai. I'm sorry about that, but I think you kind of catch my drift here. 3554, we kind of bounced off of it a little bit already. We've hit a low this week of 3549. It's just, same situation here. I think the Shanghai is going to do another flush. It did provide a little bit of a target-rich environment. Now, I think on the Shanghai, you guys are just going to have to sit tight and wait for another breach of that 3554, especially a close on a daily. But remember, we got these profiles appearing above price action on the Shanghai on our daily, and it's happened again. That's very bearish, guys. I mean, it's just, this is an algorithm. When that happens, it's not good. And since we're sitting on weekly unfair lows on the Shanghai, I just feel like this is a flush opportunity. And as you know, there's the U.S. market and quite a few other products across the globe, commodities included, are looking at this particular situation hardcore. And if you want to try to figure out why the U.S. stock market might not be going up any higher. I don't know why it's going up at all, but if you see this thing start to get creamed again on the Shanghai and start some flush activity, there's going to be a lot of U.S. investors that are going to be, is this the right time to be long a bunch of stocks that are to some degree related globally to other indices in the world that are just getting sick, namely the globe's second largest economy. I mean, it's just got to keep your eye on this one. That's what I'm trying to say here. Let's take a look at this particular trade, this is, one near and dear to my heart. The yen trade, again, stops below 123.39. Nothing really changing here. All this information's in the scanner, by the way. Let's take a look, by the way, I forgot to show this. Let's take a look at the Shanghai situation. This is our weekly rating. As you can see, weekly breadth negative, daily breadth negative, 240 breadth negative, and 60 closed just a smidget higher. Now, when you look at these, I'm going to pull up the Shanghai here really quick. When you look at these crossovers, and I've showed you guys the historical reports on these breadth crossovers, always in the marketplace for years. I've showed you those stats before. I can pull them up again if you guys want to see them. Just float that concept in the den here. But as you look at these, especially on a 240-minute or 60-minute, when you have these breadth crossovers, you're supposed to be, again, I'm going to blow this up, you're supposed to be short here. And as you can see, there's no reason to start going long to Shanghai, in addition to everything else we've been saying. Here's our 1 hour, a little bit of a hint there, but here's our daily, here's our weekly. We're all still breadth negative across the board for the most part. Somebody's asking for those reports. Let me do this. Let me dig those up, Mixter. I don't know your real name, in the den. Let me dig those up while we're on the next break, and I'll post them. And you'll see it's just evidence, proof of concept, how powerful this breadth rollover situation is. Basically, when the red line, we'll talk about that after the break. But let me go back to our indices grid here. And as you can see, I mean, the Shanghai is in our heat map, heat grid, red across those time frames as relative to a ranking system. Here's our weekly ranking system. As you can see, the S&Ps are a little mixed up here. So that's why we're not super excited about getting into the long scene there. But let me cover a couple of the usual suspects, and then we'll get into that after the break, along with some stocks. Now, the euro, this has kind of been a pain in the butt, really, for me personally. I've tried to use, let me wait for our weekly to pop up there. We're going to talk about this. Here's where we are with the euro on the daily situation. You've got some resistance around 110.12. I'm looking at this relative to the short side all the time. Let's see if we got our weekly in. Oh, here we go. And here's the big number for me, 109.48. So what are we trading right now? 109.55. This is real time. So let me, all right, we're going to hit this right after the break, and we're going to take a look at some of the proof of concept with the indices relative to the breadth.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in 1 index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Promised somebody I was going to show the Shanghai stats. I want to finish up with the euro first. Here's the situation on the euro, the long term. I'm still a big fan of this product going south. Here's the 109.48.49 area. We're trading 109.48.49 right now. I'm going to be wanting to get back in the water on the south side. I got stopped out of this kind of knee-jerk rally that happened last week and then on Friday. But again, I love this type of action that it just wants to migrate really quickly back down to these levels. And when you look at this, you may be saying, well, God, doesn't that mean that this level is going to be a good support area because it doesn't want to seem to go lower? No, this is going to be a flush area. And this is one that I'm going to wait till it gets a little bit lower, start hitting the gas pedal on the short side again and putting the stops above that 109.50 area again. And hopefully this thing can revisit these 104 areas on the euro, and that's 500 pips down, and that's some decent victories. All right, so we're going to take a look at the Shanghai stats here really quick. This is what I was talking about with the, believe it or not, this is true. This is a 60-minute breadth crossover on the Shanghai with all the trades going back into 2012. So as you can see, it's a pretty smooth P&L curve regardless. And then you had the wicked stuff that happened. We did this back testing back to about June 1st. We haven't recalculated it lately, but this is kind of that proof of concept with breadth crossovers. There's a lot of subjectivity to using indicators in general, but I kind of take this at face value when it's happening, especially on this product. When I go into the Shanghai, I'm going to go into my indices here. I'm going to pull up the Shanghai 60-minute. We just started showing some hints of, crossing over green again here. But again, remember, I'm coupling this with the action on the long term. and especially on those inflection points. So here's the, what did I do here? I messed up. Okay, so here's the daily situation. We're still breadth negative here on the crossover. On the weekly, obviously breadth negative here, and on the 240, obviously breadth negative here. So again, I mean, this is, you know, we're sitting at support on the Shanghai, supposedly on the weekly 35.54, and there's not a lot of indicators saying that it's time to get long and try to buy a bounce. I mean, this is an ugly situation that could develop a lot uglier, more uglier. I don't know if my English is bad from the South here. Talking about the South, you know, I was talking, my mother's 88 years old, and I was talking to her on the phone. She just, you know, she has a lot of good stories. I mean, she's, you know, the chicken in every pot. Who said that? Who was president during the Depression? Good Lord, why don't I know this? Who can tell me who was the president? No, can't remember the president. No, not FDR. The guy before FDR. It's on the tip of my tongue. Boring guy, wasn't an accountant. Hoover, that's it. He was an accountant, not the most exciting guy in the world. She tells me a lot of stories about that, and then she started in, you know, the other day that she used to sit around and listen to her grandmother tell stories, who was 90 when she was a child, about, you know, the Union soldiers coming by and stealing all the chickens and pigs, and during the Civil War. And it's amazing the stories that my mother can come up with. But, you know, I was thinking about that relative to this Confederate flag situation. You know, there wasn't Fox News back then. There was no internet. In fact, it took 3 weeks to get a message across the pond back and forth to in 1860 back, you know, to Great Britain and back, or England or whatever. And a lot of people in the South, is, you know, it was obviously a tough situation. But, you know, that Southern pride, whatever. I mean, I don't know if the flag is all about slavery. I have no idea. For some people, it was just, you know, your homeland is getting invaded, and, you know, it's states' rights and things like that back then, and a little more so than now. And it's just, you know, you can't discount all that, in my opinion. But Sherman had it right. I will say that. I mean, this country came together, and ultimately it took a lot of bloodshed to make that happen. But Sherman had it right. When, you know, the people in the South have always, you know, Sherman's a bad name, but him causing massive pain was the quickest way to end that war, and he knew it. And, you know, I actually kind of commend him on that level. Anyway, sorry to digress there. All right, so what we're going to do here is we're going to take a look at Apple. All right, so, and I tell you what, I'm going to do a quick reboot here of eSignal, because for some reason my weekly charts are, as you can see, non-existent. If you guys can sit tight, let's see here. Let me just get eSignal rebooted here so we can get some weekly charts. And by the way, we're just kind of accessing everything on a server in the cloud. Oh, let's see here, close the program, send later. Let me take you guys off the server view here. Let me get this restarted. Here we go. All right, so we got our, okay, so this is a story on Apple. We talked about 124.70 being a big number here, and I'm going to see where we're at pre-market, 121.45. So we've gotten back down below, which is kind of nice. We talked about waiting until this happened again, below 124.70, and then we've got some even higher level confirmations getting below that daily unfair low, 123.09. So again, in my opinion, we can place stops above that DMZ on a long-term basis and just let this thing kind of fall apart for a while. And the only way I'd want to start taking this off is if we started seeing some new profiles attempt to appear on the weekly and the daily, and you'll get those in the scanner. So what I'm going to do is I'm going to go into the scanner real quick here. I'm going to go into my S&P 500. I'm going to click on that. I'm going to look at Apple. And as you can see now, we've got, and by the way, we're putting a sorting feature in here this week. You'll have a new upgrade to this, along with some other features, which are going to show the ability to click on custom lists that you manufacture very quickly to create your own portfolios. And then you'll be able to create your own breadths based on your own portfolios, which is, I think, really, really cool for guys out there who are trading a lot of instruments. And you can see where your breadth situation is relative to your own portfolio, relative to the index itself, which I'll explain all that. But the fact of the matter is, on Apple, we're trading below profiles in the weekly and daily here. And obviously on the shorter term, you've got some inflection points you can pay attention to. 121.12 down below in the 240s. I think we're trading 121.24. Which is what we said. Well, let me see here. Let's pull this landscape chart up. So that's the situation on the multi-time frame. Here's the 121.12. That's 121. Let me just see what that was here. 123.09, and then 121.12. We're trading 121.45. Okay, so basically in a red light, green light type fashion, it's okay to be short and not okay to be long on a long-term and intermediate-term Apple basis. It's not time, in my opinion, to start trying to pick bottoms on Apple. You had that chance last week. Didn't work out. So right now, again, Apple, I think if you're considering trying to find a time to step in and try to, scoop up some Apple shares, I think you just need to sit tight and wait. You might have some better opportunities a little farther south than this. If you guys have any other stocks you want me to look at, please throw them out there. That's a request right from the den. I want to take a look at IBM. I've been kind of looking at this lately. Obviously, I had a little bit of a rally last week. But the good news is I'm a big fan of shorting weak stocks right now, and I think you've got an opportunity at 163.20. If we can just get a little bit higher, might be a little bit more fertile stomping ground here to short IBM. We're going to take one look at Amazon really quick. I get emails about this. Is this stock too high? Is it time to short it? I mean, I don't think you don't have any new information here. And this is a stock, obviously, this is our 240. We've talked about this. It's probably going to explore the fair auction again up top, 568.29. Okay. And that's the situation on Amazon. I'm not a fan of shorting this. Let's take a look at the IWM. This is the Russell. Here's the weekly. I mean, the inflection points to pay attention to on the long-term basis, 122.32. Let me restate that. 122.52, excuse me. And 122.60. So again, not a big fan of going long indices right now. I'd much rather see this get below that 122.60, 122.50. Then start hitting the short gas pedal again, and your targets will be 119.99 or just 120 down below. Not a big fan of going long this thing right now. Again, I know we're starting to show some green shoots on the 240s right now, but you want to more than likely let this thing relax back down below 122.50 and then start looking at it as a short opportunity again. IBB. hard to argue with whether this is a long relative strength trade here. 368.61, those weekly unfair lows that we bounced off of last week, we hit 369.69, so very close to that, and got away from it really quick on a market move up. But here's the daily situation. I'm not a fan of going long stocks right now. I mean, this is there's probably better shorts out there than this one, but you've got some resistance at 384.17. You see that right there, and again, in the scanner, you'll be able to see all these inflection points real quick. So what do you do with the IBB? Not a big fan of going long this thing, but you got some short opportunities with stops above 384.17 based on your appetite for risk, in my opinion. And the reason I don't scale down into these shorter term time frames is when I see the longer term inflection points, weeklies or dailies, those always take precedence over anything going on the short term. We're going to take a look at another heavy weighted stock, Netflix. Again, yeah, we'll take a look at that. This is Netflix. Again, nothing to play around with on the short side. You've got better opportunities on the short side. This is nothing to play around with here. This thing could go another 50 points higher in a heartbeat based on people being caught short. Opportunities on the short side. This is what I do. It's again, probably like a broken record, but it picks out some really clear opportunities, in my opinion. Really easy. There's a lot of different ways to sort stocks in here, and I'm going to show them to you in the last section. But below the box, that means below profiles. Apple is in here, as you can see. So I've said, what's not cooperating on the move up from the market. Below profiles, weekly and daily. Apple's the first stock in here. So, just like we said before, by definition, it's kind of okay to be short, not okay to be long this thing right now. Some of the same instruments are on here, Fossil, FOSL, even though you have some green shoots here. So what you can use this in quite a few different ways. Again, level 3 communications, Murphy Oil, and you can get really pinpoint accurate with this thing. Let me just show me matching results here. Whole Foods markets, I mean, these are no mystery to anybody that they've been stocks that are down, but if the market turns south, these things could come apart even more so. T. Rowe Price Group, a lot of the oil drillers are on here, Transocean, Newmont Mining, National Oil Well, Verizon Communications. Procter & Gamble's back on the list in a big way. Tom's been talking about this. We're going to talk about Procter & Gamble and then a couple other stock plays relative to the scanner when we get back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I just wanted to mention the XLV really quick here. We again trying to not find stocks that are too high to short. We want to try to find situations, put a gun to my head, maybe go long something that's showing relative strength to the marketplace itself. This is something we talked about. Get back across the 75.5 border. And what are we looking at now with the XLV? You got intermediate support at 76.35 and long-term support now at 75.62. So again, something not a bad long here. I'm sorry, people hit me from all angles here in the morning. We're going to take a look at, what was that REIT situation? IYR, was it IYR? IYR, here we go, sorry. All right, so, again, this is obviously a difficult stock to day trade. This is kind of what I'm looking at as support on the IYR, 73.28. Targets up top, 77.52. Again, do I think the market's going to keep heading north? No, I don't. Intermediate support, 74.72. So, it's starting to show some green shoots here. Finally, starting to break above profiles here. We actually turned north above the zero line on Navigator lately, and as you see, we made lower lows on our IYR product and made, to some degree, higher lows on Navigator. Then we crossed above the zero line. So I think the worm has turned on this for a while. I don't think it's a good short. And if you're going to try to nibble on this on the long side, I think you got to be willing to maybe say uncle below 73.28 on IYR based on all that. Again, here's the short-term 240 situation. Not a bad-looking situation on the IYR, but I'm not a big fan of going long too much right now. There was something else somebody wanted me to take a look at. IBB. Is that it? Yep, I think so. No, we've already looked at that. I'm sorry. I was just reading back in time. All right, so to sum this up, we're going to hit the grains really, really quick. Oh, and by the way, I know this is a question somebody had. In our scanner, you got a chance to kind of rank ETFs on different time frames. These are the 9 major spider ETFs. They're pretty broad. We can put more ETFs in here, and we are going to put more ETFs in here. We're also going to allow you to choose your own basket, to make your own breadth on your own portfolio, like I talked about before. So please send emails in of ETFs you guys want to see in here. This is our weekly ranking, daily ranking, 4-hour. We're going to take a look at November beans here. I was just kind of astonished the way this thing had rallied recently, and John from Philadelphia had called that perfectly based on some weather scares and flooding situation out in the Midwest. But you know, here's the situation on. We had this profile appear well above on our daily on new crop beans on November. There's no real end in sight on this one, in my opinion. You've got targets down below 910. I think you got to think about that as a target right now. This is our weekly, and you know, my prediction at the end of the year, we're probably going to be in the $8 range. I still think that's going to hold true. Thanks very much, guys. Larry's next. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.